Hey everybody, Ace here. September has been a crazy month for the stock market, so I'm going to quickly go over what's been happening in the stock market, what you should do going forward, and anything else you might possibly need to know for retirement. September has been a wild ride in the stock market, with the Dow Jones Industrial Average dropping roughly 6% from 29,000 down to 27,200. The S&P 500 has gone from a high of 3580 at the beginning of September down to 3200, roughly an 8% drop in the last 3 weeks. So why has September been such a downward trend in the stock market? Well, there's a variety of reasons why, and I'm going to quickly hit over a couple of those. First is the worsening pandemic. As it currently sits in the United States, COVID doesn't seem to be going away anytime soon. With an increased number of cases every day and an increased number of deaths, COVID just continues to put a dampener on the US economy. Things just are not looking good. Second is upcoming policy changes that might happen. Investors currently don't know what's going to happen with different policies and taxes going forward due to the presidential election that's coming up in November. And typically with election years, the back half of the year tends to have more volatility and less growth in the stock market than the first half of the year. And what these two things boil down to is uncertainty. Investors hate uncertainty. Heck, I hate uncertainty. I don't like not knowing what I'm gonna have for dinner tonight or what my weekend is gonna be. And with all the uncertainty coming forward, investors do not like it. So they're gonna be a lot less risk averse, or they're gonna play it safer in their investments. And because of that, they're going to sell some stocks and put them into safer things, therefore driving the market down. And some other factors that are playing in the stock market decline I'm going to list, but not go into detail on, are increased retail investors in the stock market, increased option and margin traders, increased COVID cases in Europe, stimulus package delays, US banks' potential $2 trillion worth of fraud. The list goes on and on and on. It just seems like it never ends. Now, after just briefly highlighting over all that and knowing all that, you're probably thinking, well, what do I do right now? What should I do with my retirement fund? And I will tell you, nothing. Absolutely nothing. Do not touch your retirement fund. Continue to add to it. You have to be in it for the long game. You have to be thinking long term. Sure, the market's going to go down in this short stint. There might be a 10, 20% correction, but ultimately, 10, 20, or 30 years down the road, the market will climb. You just have to continue to invest into your 401k, your IRAs, or whatever other retirement options you are doing for the long term. Do not, and I will repeat, do not get caught into trying to time the market. Don't think, man, the market's dropped roughly 10%. I'm just going to cut my losses now and I'll buy back in when it gets deeper. Don't try to be a trader. Be an investor for the long term. That's what you need to do to build wealth in your retirement accounts. Remember, slow and steady wins the race. You have probably heard this over 100 times, but I'm going to say it again. Time in the market is the best thing you can do to grow your retirement accounts. For me personally, I'm still going to be investing bi-weekly into my 401ks and my Roth IRAs, and any additional cash I get, I'm just going to hold on to the sidelines to buy my stocks at a cheaper discount. The best thing when the market corrects like this, or when stocks take a dive, is that you need to think, hey, stocks are now on sale. Rather than having to buy Apple at $110 a share, if it drops down to $95, you think, hey, I just got Apple at a discount rather than having to buy it at a premium. That's the mentality you have to take when the stock market drops. And lastly, just be prepared for the market to be more volatile in the upcoming months. With all the craziness that has gone on in 2020, do not be surprised or caught off guard if there's some big event that happens and the stock market comes crashing down 20%. It's a possibility. Now, with all that being said, I'm not a financial advisor, and I'm not giving you any advice. I'm just telling you what I'm doing personally and the mentality you should probably have going forward when you're trying to build your retirement accounts. If Britney Spears can get through 2008, you can get through 2020. I believe in you. If you like this video, please just tap that thumbs up button for me. That'd really help. And subscribe for more content. Also, leave me a comment down below on how you're going to make it through the rest of 2020. I would love to know. And until then, I'll see you in the next video.